Hi, I'm Jimmy. In this video, we're going to look at Intel, ticker symbol INTC. So we're going to start with the basics of Intel's business, and then we're actually going to look at what's happened to Intel stock over, let's say, the past year to try to better understand what drives Intel's stock. And then we're going to try to come up with a fair value for Intel stock using discounted free cash. Now, on the Investors Grow website, we have this cool feature where we can toggle on key events to see what news was for a specific day, which oftentimes helps us determine why a stock may have jumped up or down in a big way. So we're going to use this feature in a little bit to help us better understand what makes a company like Intel move. Okay, now let's jump in and look quickly at Intel's business. When we pull down their business segment, well, we can see that they break their business into four main segments. Their largest segment is what they call their client computing group. This group powers the PCs in homes and schools and offices you find worldwide. It designs and builds core processors, things like the Intel Core chip family. Essentially, it teams up with computer makers, and it makes each new generation of computers more powerful and more efficient. Then they have their data center group down here. This segment made up just short of 20% of Intel's revenue in their last fiscal year. They focus on high-performance computer. Think places like data centers, everything powering AI, things along those lines. This business is likely to have a ton of upside over the next few years, but this is where a lot of the high-performance computing that needs to be done, this is where those chips are. Then we have the Intel Foundry Services. We can think of this group as sort of like the factory for hire. Let's say other companies want to manufacture their own chips. Well, they can use Intel's manufacturing facilities and they can manufacture custom chips. Taiwan Semiconductor does a lot of this. This is kind of their approach to the very same thing. Then we have their smallest segment coming in at just short of 10% of total revenue for last year. And basically what this segment does, the Internet of Things segment, what it does is it brings chips to everyday products. Think factory robots or maybe medical devices that in real time send data back to medical professionals like doctors, things like that. Or maybe you have a vacuum that has a chip in it that, turns on and vacuums every day. Things along those lines. This is where that revenue is generated. Okay, now let's jump in and look at where they sell their product. Where in the world do they sell their products? Now, you might find it interesting is that this is their 2024 revenue broken up by region, where they sell their products. And you might see that a relatively small amount of their revenue is generated in the United States. Meanwhile, more revenue is generated over in China. I just thought that was interesting. This is a U.S. company, and Intel's known to be the main U.S. chip maker. Just pointing out where they're actually selling their products. Okay, now let's jump in and look at some of their numbers. Now, this is where the Intel story really starts to get interesting. So, last year, they put up about $53 billion in revenue. That was 2024. That's about a 2% drop from the previous year. But it's about a 33% drop from their high. Now, Intel's business has really gone through a lot of changes over the past few years. We can see that right in their numbers. Obviously, we can see the decline in revenue over the past couple of years, but we can see a very similar story when we jump in and look at gross profit. And just so we're all on the same page, gross profit is what is left of revenue after they make their products. So back in 2015, well, for every $100 in revenue that Intel brought in, well, about 62 or 63 bucks was left after they made their product. But fast forward to 2024 and only 32 or 33 bucks are left after they make their products. Now, if nothing else, this tells us that Intel is losing pricing power, meaning that before where they were able to charge a premium for their product, that premium is going away. Now, we can see this confirmed when we go a bit further down the income statement, and now we look at net income profit margins. Well, we can see that profit margins have gotten extremely low. In 2023, profit margins, net income profit margins, were just about 3%, which is a far cry from the almost 30% just a few years ago. Now, jumping over to actual net income numbers, well, one thing I want to point out here is that we can see that in 2024, they showed a huge loss of about $18.7 billion. But these are US GAAP numbers. GAAP is short for Generally Accepted Accounting Principles. And this includes one-time charges. For example, they had an almost $10 billion tax valuation allowance charge on this. Essentially, a tax valuation allowance is sort of like a coupon that Intel had expected to be able to cash in with the government at some point. And they thought they were going to be able to pay less taxes down the line because of that. But then they realized with today's rules, they're not going to be able to do that. They're not going to get that benefit. So they write it off today and it hits their financials. It hits their income statement and knocks everything down a level. Between that and then they had some restructuring costs in there, they had some impairment costs, some asset valuation write-downs, and you end up with a real bad negative net income number for 2024. Now, if we were to remove all those one-time events, well, the net income number for 2024 would actually be closer to about negative 3.7 billion. So not as bad as $19 billion loss, but still not all that great. Okay, now let's jump over to their stock history so we can get a better look at what has happened to Intel stock over the past year. Okay, so here's how this works on the Investors Grow website. Let's say we're curious about what happened during this 8.2% drop about a year ago. Well, when we click on that, we get a list of articles of what happened that day, the big articles that came out that day. And we can see that in this case, one of them says, why is Intel stock down? So I clicked on that, jumped over, read the article, and basically what the article came to tell us was that Intel had announced that their foundry services business was not doing as good as they expected. They essentially lowered their guidance. Because that business was struggling, well, the stock started to tumble from about the mid-40s or so, and the decline had begun around that point. Well, a couple months later, Intel announced earnings. And although they beat estimates for both revenue and profit numbers, they once again lowered guidance, and the stock began to drop again. Then we come over to this massive drop here. Well, this was the biggest drop for Intel stock in the past 40 years. So when we clicked on that news and we looked at it, well, they announced plans to fire about 10% of their workforce. 15,000 jobs were going to be cut. They suspended their quarterly dividend. They essentially said that they needed cash flows to be higher in order to restore their dividend. Now, this sort of makes sense, and we'll see that in a second when we look at free cash flow, but still, the market didn't like it, and the stock got croaked because of it. Now, we're going to skip ahead a little bit to December of 2024. During a lot of the time, bad news, underperforming segments, lowering guidance, rough earnings. That's pretty much what kept happening to this company. But in December of 2024, Intel announced that the CEO was stepping down. And we're actually going to come back to this in a moment because this, I think, is a bigger deal than the market really reacted to it. Well, now let's jump over and look at the reason that the stock jumped recently. Here, it was announced that Broadcom and Taiwan Semiconductor are considering a potential deal where they buy pieces of Intel's business. Early reports is that Broadcom is interested in their chip design business, and Taiwan Semiconductor says they're interested in picking off some or all of Intel's chip-making plants. Now, these talks appear to be in the very early stages, and I'm not actually sure how likely it is for either one of these deals to go through. How okay is the government going to be with Intel selling these pieces of the business? So you may remember a few years ago that Intel got a bunch of money from the US government with the US CHIPS Act. They ended up getting about $7.8 billion from the CHIPS Act and another $3 or so billion from the Department of Defense, from the Pentagon, whatever you want to call it. So they got about $10 billion. But with that money came certain provisions that Intel has to follow. For example, one rule is that if they decide to sell off, let's say, part of their chip manufacturing business, let's say their foundry services segment here, well, they must maintain control of more than 50%. So let's say 50.1% would be allowed. This is, in theory, what's kind of happening in the background, but it's not like they can sell off the entire thing. So if any company wanted to buy this segment or part of this segment, well, Intel still needs to maintain control. So I think that this is important to keep in the back of our minds as we consider the possibility of Intel selling off any of their business segments. In theory, they'd get a short-term cash infusion now, but give up that cut of their revenue forever. So that could be a problem. Okay, now let's jump in and look at some of their free cash flow numbers. So we can see that free cash flow, starting in 2020, after that, Intel's free cash flow really started to nosedive. And over the past fiscal year, they've lost more than about $40 billion over the past 3 fiscal years. Now, when we add analyst estimates to this, analysts are expecting for free cash flow to stay negative for the next couple of years. And by the way, if they do stay negative, if this entire time period, while they're negative, they would have lost more than $50 billion in free cash flow if we would add up all of that. Now, after those 2 years of negative free cash flow numbers, analysts are expecting for free cash flow to get back to about pre-drop levels, give or take, just short of it. But they're expecting for free cash flow to recover. Now, we can use these free cash flow estimates in a discounted cash flow calculation to determine the fair value for Intel stock to see if it looks undervalued. And when we jump in and look at the results, well, we can see that Intel stock does in fact look undervalued. Now, if we're curious, down here we have this 12.55%. That's the implied return. So basically, if your required rate of return is less than 12.55%, this stock is undervalued. If it's higher than 12.55%, this stock is overvalued. That's just another way of looking at discounted cash flow numbers. But broadly speaking, we can see that Intel stock, based on analyst estimates for free cash flow, it does look undervalued. But I'll tell you what my concern is. Let's jump back to the free cash flow numbers here. So free cash flow numbers have dipped, and analysts are expecting for those numbers to stay low but gradually get better. That makes a lot of sense if we think about the new plants that Intel's putting up, all the money that Intel's spending today to, in theory, generate higher free cash flow later. All those numbers would generally, all that spent money would fall into capital expenditures. That would decrease free cash flow. But in time, they would have to spend less once they put up a new plant. It's not like they're going to have to put it up again. Well, free cash flow could climb higher over the next few years. So the drops kind of make sense. But now this brings us to my issue. Now, obviously, these aren't going to be exact numbers. This is a hypothetical example. But if we were to roll back to 2021, well, the broad belief back then was that free cash flow would end up looking something like this. There would be a pullback and then a recovery for Intel's free cash flow back to pre-drop levels. And as time went on, well, that story kind of continued. Numbers ended up being more than they thought, but they thought it would recover to pre-drop levels. And it just kept kind of continuing until you bring us back to where we are today, where once again, analysts were expecting it to pull back, but then not quite recover, but then recover a few years out. So I think the trickiest part here is, will it happen then or will it take longer? Now, this brings us back to the CEO getting let go at the end of 2024. So at that time, the board essentially drove out the CEO and they replaced the CEO with two co-CEOs that are temporary CEOs while they're looking for their long-term CEO. So the long-term CEO of Intel is not yet in place. My issue is this doesn't exactly build a ton of confidence to their ability to pull all this off. Pat Gelsinger, the previous CEO, had spent a lot of time. He was there for a few years. He spent a lot of time presenting what the long-term plan was and essentially, gave a timeline for how this would play out. This information is how analysts are coming up with their numbers. But is that plan going to change now? Not really sure. And because of that, that could end up making this timeline get pushed out a decent amount. And if it does, I'm not sure the volatility in Intel stock between now and then make it a good investment at this point. As of right now, Intel is looking up at their competitors. They're chasing competitors like Taiwan Semiconductor or NVIDIA. They're chasing those companies from a quality perspective. And without the new CEO in place, it's really difficult to say whether or not the plan that they have is a good plan because all plans are kind of on hold right now. So while the stock does look undervalued, that undervalued position might be deserved. I think that right now the stock, it should be undervalued because of their lack of clarity. Now, if you're looking for some companies that perhaps could be undervalued and also pay a decent dividend, I actually recently did a video called 5 dividend stocks that I think look interesting at this point. I will leave a link to that right here, link in the description below. And if you'd like to sign up to get access to the Investors Grow website, link in the description below as well. Thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.